You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is time to talk about what's going on in the world of futures options. Yes, it is time for TWIFO. My name is Mark Longo from the THEOptionsInsider.com, as well as from the ever-engaging, ever-entertaining, hopefully ever-educational network upon which so many of you are binging these days. If you like what you hear for this show, anything else on the network, throw some stars, a like, a review, listen on YouTube, throw a comment, whatever floats your boat does help new people discover the content. Of course, if you want to discover more content, only one thing to do, theoptionsinsider.com/pro, P-R-O, the place to go to get 200 plus hours of exclusive shows coming at you. It's a lot of great content, listeners. The guest roster on that pro side, pretty impressive. Check it out for yourselves, of course. Giveaways, all sorts of fun. TheOptionsInsider.com/pro is the place to go. As we go around to see who's joining us in the old CME Group hot seat this week, I am pleased to welcome back on our old friend, Mr. Russell Rhoads from the Kelley School of Business, also moonlights as an author of one or two or half a dozen financial and volatility-oriented tomes. Mr. Rhoads, welcome back to TWIFO, sir. It has been too long.
Too long? It's been like a couple of weeks.
It's far too long.
Has it? Did you miss me?
I'm teasing.
So.
It was very recently. Yes, we did chat. We like our check-ins, though.
It's always been too long if I'm not on 1 week, and I wasn't on last week.
Well, we usually have you booked after your buddy Carly there, and she was on last week, so it makes sense that you roll in after her to discuss all the fun that is going on in the world of futures options. Let's get to it. A little bit of the old movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down everything lighting it up to the light side, aka the upside, and to the dark side over there at CME Group this week. Mr. Rhoads, we have another interesting smattering of products lighting up our tape this week. Where should we begin this week, sir? To the light side or to the dark side?
Oh, let's go to the dark side first, because there does appear to be a little bit of a theme on the light side.
There does appear to be a theme on the light side. So to the dark side we go, listeners. Number 5, we're starting off in the rates. It's the Ultra 30-year off 2.61%. By the way, looking at this chart, listeners, you could see it is, shall we say, mostly red. Probably not surprising, given the developments we've seen in the market over the past week out there. I would say this is roughly 75-25 red versus green out there. So certainly enough to make a top 5 and even a top 10 for the light side. I wouldn't go much beyond that, though. But to the dark side we go right now. We've got the Ultra 30-year coming in number 5 off 2.61%. Number 4, so we go from the rates off to equities. It's the E-mini mid-cap S&P 400. Yes, everyone's favorite index. People can't shut up about it, off 2.82%. Number 3, from equities, we go off to FX. Don't go there too often. It's the peso USD, off 3.1%. You know, it's kind of an interesting week to the dark side when we've got FX and rates all hitting it at once. And then number 2, we've got silver. So off to the metals now. Quite the smattering here on the dark side, off 6.4%. And our number 1 dark side mover this week, off nearly 7%, 6.96%, is platinum. It's also our largest percentage mover on the week this week. Platinum was on the movers and shakers last week as well. It was number 5 in the other direction, up 4.6%. So giving back all of that and then some this week. Now to the light side we go. Like I said, we could put together, if we wanted to, probably a light side top 10. If we did so, we would see Chicago wheat coming in at the number 10 spot, up a little over 1, about 1.2%. It was number 2 in the other direction last week, off 5.3%. I mentioned Chicago wheat because the actual bottom of the light side, number 5, is KC wheat. So we're going off to the ags now, listeners, up 2.61%. And then after that, it is pretty much all energy all the time, listeners. Number 4, we have our energy sector. Remember, we've talked about these sector futures on the S&P that have been getting a little bit more traction of late. No options yet, but the future is starting to draw a little bit more action. Today, the energy sector future up 2.63% for the number 4 spot. Number 3, we're off to Brent. Brent off up 4.08%. And the number 3 spot. Number 2, off to the Texas T, up 4.51% for WTI. It was number 7 in the same direction last week, so expanding beyond our top 5. And it was up 4.5%. It was a very light side heavy week, so you could be up 4.5% last week and still not even be in the top 5. So that showed you how much green we have on the screen last week. Number 1, a little bit of a head scratcher. Nat gas showing up on our report this week, up 6.8%. If you've been watching the futures, you know that they are taking a bit of a hiatus out there right now. So why this is reading as up nearly 7% this week. Looks like some gremlins in the works there. So we'll take a look at that. In fact, let's kick things off in the energy side and see what's lighting up the tape out there first, listeners.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, to the world of energy we go, the ever mysterious, ever head-scratching world of energy. Head on over to the old URL, cmegroup.com/TWIFO, TWIFO. Once you're there, go into that drop-down. You're going to go down 3 slots to energy. Then you're going to go, let's start in crude because everyone's talking crude right now. So let's go out to WTI right now. It's the top of that product family list, and you'll see WTI right there. If you do that, listeners, coming in, you see WTI hanging out just a tick north of the 87 handle right now, up about 1.5 points just since Monday session. So up nearly 2% just since Monday. Of course, back to our show last week, up about 4.5%. Also looking pretty robust on the volume side as well, nearly 540,000 contracts. That's about 100,000 more than we would expect on a normal week, let alone a holiday week. So you add in the holiday factor, and that's substantially more volume than we would expect out there right now. Of course, a lot of that driven by all the drama going on out there. A lot going on. We have, of course, a lot going on in Alaska recently with canceling a lot of those leases out there. Of course, the Saudis continuing their production cuts. So a lot of things conspiring to add a hurricane, more on the horizon perhaps. So a lot of things conspiring to drive WTI ever upward. In fact, Mr. Rhoads, last week on the show, your best friend out there, Miss Carly Garner, said she was expecting a triple-digit WTI. I do believe she said before the end of the year. So she's looking for a lot more upside. A, does that surprise you? And B, what is catching your eye out there in the world of Texas tea this week, sir?
It doesn't surprise me that she's calling for that. We got to break out one direction or another, and we're at the higher end right now. And we've kind of been staying at the higher end, if I remember correctly. It's not a market that I pay attention to all the time, but yeah, I think we're. I wouldn't be the least bit surprised. Plus, it only takes a tactical nuke to get us to about 120, right? And you got to assume that,
don't even whisper that into the ether, sir.
Well, unfortunately, if you're thinking about reality here, if Russia loses that thing, which it looks like they're going to lose that, eventually it's not going to work out in the way that they hope. They're not taking over Ukraine for damn sure. I just have this funny feeling that at some point they're running out of ammunition, etc. They're going to pull that one out of their hat. And because of that, I really do avoid that possibility. I really do avoid being short anything energy oriented or really anything that might be considered inflationary or inflationary if things expand. So I used to always have this fear when I was long S&P futures over the weekend that we were going to get a big earthquake in Japan. Which is the thing that took down Barings Bank. And in the energy sector, I haven't gone short. I've gone long a few times, but I've never gone short when we've been at the upper end of the range, just because not the black swan, but the gray swan of things escalating in that part of the world. Plus, anybody that produces energy outside the U.S. seems to be teaming up against us. And we just seem to be making things worse on our end at the same time. Not
a lot of friends and allies lining up on the energy front for us around the world out there. Let's get to some of the action we're seeing out there right now, listeners. Like we said, a pretty action-packed week for WTI, especially when you factor in the truncated holiday trading session here. And like I said, at about an 87 in that front future, actually 40% of this 540,000 contracts this week is going up in the October future, which has a whopping, this is the one that has about 8 days to go. So we're going to hang out there, listeners. So a very near-dated paper, which CME is all a Twitter about right now. They were just tweeting out before the show this morning. More than 100,000 Monday and Wednesday WTI crude oil weekly options contracts have traded since launching just over a month ago. So folks liking near-data stuff. Mr. Rhoads, we're always talking about zero DTE in the equities. We're not quite there yet, but we're getting pretty darn close. We have a 1 day to go contract here in WTI right now. So are we going to be on this show talking about slinging a bunch of 0 day WTI in a couple of months, sir?
If they trade it, or if we create it and they come, they'll create it. And don't you assume that seeing the numbers that they're seeing on the Monday and Wednesday crude oil weekly options just going to lead them to maybe adding a Tuesday, Thursday, and I assume they already got the Friday. But yeah, they've got Monday, Wednesday, Friday right now. Tuesday, Thursday, it's coming. It's got to be coming. I don't know anything, but you got to assume that it's coming.
They're not oblivious to the trend out there. Everything short duration, everything bite size, everything 0 day is on fire right now. What about you, listeners? Would you be out there slinging 0 day crude, slinging some flies or whatever floats your boat out there? Might be an interesting subject for a question of the week. Where should we expand our 0 day horizons next? Everyone's talking about your Apples and your Teslas. What about WTI? Might be an intriguing one. Nat gas, a lot of potential candidates out there. Like we said, 40% of the action going up in 8 days, or I should say going away in 8 days out here. What is the vol right now in 8 day WTI? It's about 27.25, up about half a point. So not a huge vol move this week. Skew-wise, kind of the same deal. 1.3% bid with the puts last week, so a slight premium to the puts last week. This week, it's a little bit shy of 2 points, about 1.8 points. So not a huge bid to the puts. Last week, the calls were also slightly bid, 1.1%. So kind of a little bit of a slight smile in both directions. This week, the calls have come in. They're now 2.6% cheap. So about 2% bid to the puts, about 2% offered to the calls. Not a huge skew in either direction out there. I think the market is kind of waiting for that next shoe to drop out there right now. In terms of the paper, though, we are seeing some upside on the paper front. In particular, it was the October 90s going up 22,000 times this week that led our dance this week, listeners. A lot of paper. Again, that's a shortened. That's only 3 days. We have all that paper going up. Almost 23,000, actually. The big day was yesterday, 8,200 yesterday, 7,700 today, 6,800 on Tuesday. Closing earlier in the week, opening maybe today. We'll see. So intriguing stuff. Maybe folks are just bailing on these 90s all week long. We are within spitting distance of that handle, though. So intriguing stuff out there. And then right behind it, we did have some puts, the 80 puts. How about that 80-90 strangle going out in 8 days, listeners? You like that? That's 14,000 of those puts traded as well. 5,800 on Tuesday. That was the big day. 5,400 on Wednesday. And then 2,700 today. It's like opening on Tuesday and closing probably the rest of the week. So intriguing strikes kind of right around where we're hovering right now in the at-the-money side. And then right behind it, we also had some 95. So if the 90's not doing it for you, listeners, the OCC 95s, 8 days to go. Can we be at or threatening a 95 strike by then? 13,000 contracts going up on that strike. So some action, some axes to grind there. 5,900 on Wednesday, 5,500 today, 1,700 on Tuesday. It's like opening mostly on Wednesday. Maybe a roll closing on the 90s, rolling to the 95s, but the paper doesn't line up. But there was closing on the Wednesday 90s, so potentially some rolling action there. And then let's see, beyond that, we had 85 puts as well, going up about 10,000 times. Almost all of that on Tuesday, about 6,000 on Tuesday, and then the rest scattered throughout the week. By the way, if I keep saying Monday of the show for some reason, it's just because I have Monday on the brain for our usual show, even though this week, obviously, a truncated holiday week. So if you hear Monday, we're talking Tuesday here on the show today, listeners. Let's go a little bit farther out to see if you find any other interesting and or aberrant paper. And you know what? It seems like everything, all that paper, it's all packed in to the October contract. There's not a heck of a lot to speak of. Unless you want to go a little bit farther out. Let's go out to November. About 9,800 of the 80 puts did go up there. So a little bit of paper going up outside of October, but not much. Looks like the big dog for those, Wednesday, 4,000 on Wednesday, 3,200 today, 2,500 on Monday. Opening on I kept saying Monday, on Tuesday, closing the rest of the week. So a little bit of action on the 80 puts. And then also the 90 calls also going up in November, about 8,300 of those as well. Again, the big day Wednesday, 3,500 on Wednesday, and about 2,500 each Tuesday and today. So a little bit of paper outside of October, but not much. It's all there. Mr. Rhoads, sir, I know you've been busy typing away at the old Bloomberg terminal. What's it telling you about all things WTI right now, sir?
Well, what I'm looking at, you can guess what I'm looking at, because you know what I'm fixated on with respect to commodities and options, and that's the skew. And typically, when we hit a resistance point or something like that, we'll see if we're heading to the upside and we're hitting resistance. If the market's concerned about breaking through that resistance, you'll see the call implied volatility climb relative to the put implied volatility, or vice versa. Even though we have right now, we've got where we've broken out to the upside. Above 80, which was kind of a tough spot for oil forever. I'm still going backwards with my scrolling to see the last time the calls had a higher implied volatility than the puts. And oh my God, it hasn't even happened in 2023. The puts still have higher implied volatility than the calls, which makes me think that, the market is the people aren't getting in there and worrying about much higher levels with respect to the price of oil right now. They're actually kind of even and sort of within a range that I would consider it neutral after being in a spot where it looked like about 3 days ago, it looked like the option market was predicting we had reached a top in the crude oil. And that was late last week, and now it looks like it's kind of sitting on its hands, and we're in a wait and see period, at least with respect to buying put options, hoping it goes down, or buying call options, hoping it goes up. It's very balanced right now. And I wonder if that's just because we're in new territory and the shorts, don't like stepping in front of the new territory on the upside, and the people that would be worried about or hoping for higher prices are like, can it really get up there? And if they're thinking that, that's because they didn't listen to Carly. Because Carly says we're going to triple digits, and I wouldn't be the least bit surprised. And the call options are not all that expensive right now if you want to speculate on it.
Yeah, I'm with you. I was kind of surprised at the kind of neutral stance of the skew this week. I thought coming into the show this week we'd see more of a bid to the calls or a bid to something. We didn't really see a bid to much of anything this week. You're right. It does seem like we're kind of settling in around 87 right now. We shall see, but intriguing stuff. So yeah, if you are down with what Carly was putting down the show last week, people are not getting in front of you. They're not bidding it up. So it gives you perhaps an opportunity to dive in. Speaking of diving in, let's go on into the sibling product in the energy space. Also getting a lot of headlines right now. Also putting up a lot of numbers on a truncated holiday week. It is nat gas coming in. Again, go to that drop down, listeners. You're going to pop right out of crude oil. Let's go down 2 slots to nat gas. Easy to find there. You'll see coming into right now that front future 257 off about 20 cents or a little over 7%, which again is kind of weird why it was flagging on our scan this week as green on the week. Clearly not the case. 414,000 contracts on the tape, though, so that looks like a regular week, not a truncated holiday week. So impressive volume going up here in nat gas. Again, a lot of the drama coming out of Alaska, all the hurricanes, all sorts of things, labor disputes in that space, a lot of things conspiring to move nat gas prices out there right now. And once again, it's all front month all the time. 59% of that 414,000 contracts are going up in the contract that has about 19 days to go out there, listeners, in October. So we're going to head out there. What is the vol in nat gas right now? 63.5. And what are we looking at from a skew perspective? It's up about half a point, by the way. So it's kind of low from a nat gas perspective when you compare it to equity vol or precious metals vol or even ags vol. It's looking pretty robust. Skew-wise, puts last week 2.8% bid. This week, 2.9%, so no real evolution there. The calls last week, 1.7% cheap. This week, pretty much flat. So not a ton of evolution on the skew front. If you go a little bit farther out, and we do know there's a lot of seasonality in nat gas, obviously, that does change. You go out to, let's say, Q1 of next year, and you start to see almost a 10% discount to the puts and about a 10% bid to the calls. So a little bit of a bias to the upside there in the February-March timeframe of next year. But right now, not a heck of a lot to speak of. Mr. Rhoads, a surprising volume week on this truncated holiday week. What's catching your eye out there in the world of nat gas this week, sir? Nat
gas is, it's almost exactly like crude oil with respect to the risk people are pricing in. It's almost like if somebody grabbed me and twisted my right arm until it really hurt, or they said this is pain level 3, pain level 4, you're going to poop yourself unless you do some sort of nat gas option trade, I would probably do an iron butterfly right now. The at the money implied volatility is about 20 points higher than the average, and in both directions it's almost equal going out to the downside and to the upside. Typically the calls are a little bit more bid than the puts in nat gas, which I think makes a lot of sense for anybody that is aware of that market. Had a talk with a college undergrad that was going to start slinging, to use your words, natural gas futures because he was attracted to the volatility. And I was like, dude, you're going to continue to deliver Jimmy John's for the rest of your life if you decide that you're going to try to start trading nat gas. Let's start you out in the mini crude oil. Or micro crude oil, whatever the name is for the really small contracts. But had a kid going, yeah, this looks like a great market to trade. Like, yeah, but that can hurt you an awful lot as well. You're luring these kids to the dark side, Mr. Rhoads. I try not to.
Talk about diving into the deep end of the pool, just going straight to nat gas. There's a lot of places maybe you want to start along the way. By the way, I do love your analogy of trading iron butterflies because someone is squeezing your arm so hard that you're going to poop yourself. Only you, sir, can come up with such colorful analogies, sir. So well
you
done.
betcha.
That's why we bring you on the show. All right. Hopefully you won't have to twist your arm, listeners, to get you to pay attention to the show here. Right now, it's a lot of two puts going up right now in nat gas in October. The two puts going up 29,439 times this week. Again, shortened holiday week, so a decent amount of paper this week. The big day today, 13,000, almost 10,000, about 9,400 on Tuesday, 7,000 on Wednesday. Opening on Wednesday seems like closing the rest of the week. Worth noting there are about 50,000 contracts open on that strike. That two strike, we've talked about it before. There's a lot of action on that back and forth. We see strips go up. It's just one of those strikes people seem to like to key in on. All right, behind it, we have the 2.25 put. So if the 2 put's not doing it for you, 2.25 puts going up about 28,000 times this week. Unlike the 2 puts, though, the big day for those was Tuesday. About 15,000 on Tuesday, 8,000 today, 5,500 on Wednesday. And then right behind them, we have the 2 half puts. So just got a nice little put strip here leading the dance in October with 26,000 of the 2 half puts. Again, now it's all over the place. The big day again today, 13,000 of the 2 half puts. So potentially a 2 half vertical going up today. 7,700 on Wednesday, about 5,000 on Tuesday. Closing pretty much all week long. So now that we're getting to the 2 half strike, maybe some folks are rolling off the 2 half, going down 2/4, maybe 2. 2 would be a long way to roll. We have flirted with 2 a couple of times. But we haven't really threatened it too much recently. But interesting, if you'd roll from the 2 halves to the 2s, the volume does line up pretty nicely. So that could potentially be the action going up today. And then let's see, behind that we have the 2 puts going up in November. So a little bit longer term. These have nearly 50 days to go. Going up about 24, almost 25,000 times as well. And opening there, 10,000 on Wednesday, 13,000 today. That 13,000 number, that seems to be the number today. So they could be also, if they're closing on the October, maybe they're rolling to November as well, 13,000 times out to the 2 strike. We could certainly see an argument perhaps for that as well versus rolling from the 2 halves down to the 2s in the same month. That would be strange, but we have seen stranger things. And then right behind it, we have about 2 half puts also going up in November, about 16, almost 17,000 times. You got to really dig here, listeners, to find some calls. Let's see if we can find some for you, all you upside aficionados. How about the 3 calls going away in about 19 days in October? They did some paper this week, about 19,800 contracts. The big day for those, Tuesday, 7,500, 7,000 on Wednesday, 5,300 today. Seemed like they were opening on Tuesday. Then maybe somebody just decided, the heck with it, because they were closing right again on Wednesday. And then 5,300, obviously, today. And then you drop off a cliff to the 2.75 calls. They only went up about 8,000 times this week. So not a ton of call paper to be found out here. Mr. Rhoads, any secrets you've uncovered there on your very expensive Bloomberg terminal, sir? You want to
No, but did you notice, were you talking about all those 5 calls in 2024?
I have not gotten there yet. That's the strip.
That's what really, when you see the exact same freaking thing for a whole bunch of expirations, you got to wonder what's going on there.
That goes up pretty much every week. Someone does a strip. They do a 6 calls. They do 5 calls. They do something around that size. They usually do it for the entirety of the year, usually starting in April, going out to the end of the year. Seems like they did it again this week. So this week's strip, listeners, are the 5 calls going up about 1,325 times. Looks like they start in April again this year, and they go all the way out to pretty much the end of the year, 1,325 times. It's one of these head-scratching prints. We see them every week, Mr. Rhoads. And for a while there, they were doing put strips. They have switched to the calls. So maybe that's interesting in and of itself. Last week, I do believe it was the 6 strike. They have taken the opportunity to move down to the 5s. But they do a smattering in every month. They love it. Somebody likes their time strip. And it's not quite as weird as the paper we used to see in WTI, where they would do $1 wide verticals for size, ridiculous size, hundreds of thousands of contracts. But it does definitely falls in the weird category, sir. I would agree with you.
Yeah, and I'm trying to figure out exactly. I'm digging through all of these and trying to figure out exactly what we think they're doing there. If they're selling them or buying them, it looks like they might actually be selling them. I wouldn't do that. I like being married and living in a house and owning a car.
Going back to your tactical nuke scenario, that would certainly nuke your portfolio definitely.
Most definitely.
All right, so we hit on a couple of different energy options, sir, pun intended, where should we head next on ye old program, sir?
Did you want to go to grains, to ags, to the wheat?
I think we can make that happen. Should we get green, listeners? To the ags we go.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, welcome to the wonderful world of ags. Going to go to that drop down, pop out of energy, go up 2 slots to the top of the list to agriculture, then in product family, grains and oil seeds. And then from there, we're going to scroll down. We're going to go to Chicago wheat, listeners. It's doing a little bit more paper. It's usually the volume leader. Right now, Chicago wheat has about 53, almost 54,000 contracts on the tape versus 3,500 for KC wheat. So yes, we're definitely going to hang our hat in Chicago wheat. More volume, even though the bigger percentage mover is KC wheat. Mr. Rhoads, going back to your tactical nuke scenario, that would also not bode well for the wheat market. What is catching your eye out there in the wheat and the ags this week, sir?
Well, it's just it's very mixed. Even though that market was down, it looks like the skew is worried more about the upside. But wheat is one. There's certain markets that that if Vladimir Putin knows what he's going to do, he can make a whole ton of money trading wheat. You know what I mean? The energy markets are definitely beholden to what's going on over in, still continuing to go over in Eastern Europe, and some of the agricultural markets. And goodness knows, wheat is one of the biggest ones that comes out of that part of the world. They had an agreement. They didn't have an agreement. They had an agreement. They didn't have an agreement to let them feed everybody else. I think it's off right now. And, Kim Jong, I've forgotten which one we're on now. The current Kim in North Korea, I believe he's going to be meeting with Putin in the next few days because nobody else will sell Putin weapons anymore. And it'll be interesting to see what comes out of that. And if, does North Korea really even have anything that would be useful, or do they only have, a handful of ICBMs and that's it, which let's really hope that Putin does not use. But a big focus is on whether or not Russia's going to keep targeting the grains coming out of Ukraine or not. And because that's where a lot of the world's grain comes out of, that it's going to be very price sensitive to it. And this is something much like crude oil and natural gas as well. This is something I definitely wouldn't want to be short. And when you look at the call versus the put pricing, it looks like I'm not alone on that one.
Yeah, we were discussing this on the show last week as well. It does seem like they're pricing in maybe a little bit too much complacency in the wheat market, given where we were not too long ago. As you just mentioned, this grain deal, it's on again, it's off again. Are they blockading the Black Sea this week? They're not. Maybe they will. You never know what's going on. This thing could shoot up 100 handles at a clip just out of a word of Putin. And I think Carly made the same point last week on the show as well, that Putin could definitely do well manipulating wheat, and he has been known to do so perhaps in the past. So this level of complacency, we're kind of hanging out right now, up 3.25 points in that front future, listeners, about 0.5%, trading a little bit shy of 600, 598 3/4. We fast forward till end of last week, we're up about 1%. It's kind of been a gentle drift out there right now. It does seem like maybe things are a wee bit complacent in a marketplace that not too long ago was anything but complacent. Right now, 53,000 contracts. So again, a truncated holiday week, but that's decent paper, all things considered. A little over half of that, 54% coming in the D's contract that has 78 days. It's one of the things I love about the ags, Mr. Rhoads. We get so obsessed with 0 day, and then here come the ags. They say, the hell with that. Let's talk about December, Yeah,
that's probably a market that the very short-term stuff isn't going to work for because because of the amount of seasonality that is the planting and growing season that's associated with some of the ag markets. So they may be the last ones to the game that we have 0 DTE. Although I am thinking about launching an exchange that has lunchtime settled options for people that want to take the afternoon off.
Take the afternoon off. Call it the afternoon off exchange. The tea time. Like the 3 p.m. tea time exchange. Just head on out to Russell's new venture, raising funds as we speak, listeners. But yeah, a little bit refreshing to talk about December when everyone's obsessed with the next 24 hours in most other products. 54% going up in December. December wheat, $5.98 as well. So we're hanging out this kind of same level here, listeners, right around that 600 level. What is the vol in December wheat? 34 and about 2/3, up about 3.25 points this week. So decently frothing, all things considered. Once you get outside of energy, the only other real decent pocket of vol is the ags. And so wheat bringing it again this week. In terms of skew, now we're seeing a little bit of interest here, listeners. Again, we're talking about complacency. This skew is not looking too complacent, though. I said we're hanging out at about a 34 and 2/3 in the Dees vol. The puts, 11.4% cheap, so nobody's really wanting those puts right now, listeners. The calls, 15.1% bid. That was last week. It has come in a little bit. The puts are still offered, though, 9.1% cheap, and the calls about 14% bid. If we go up to that, now, again, we were just joking about 0 day, but if we do fast forward, Mr. Rhoads, to the contract that is expiring in a day, so we are getting some 0 day, then those calls are 24% bid. So we are seeing a little bit of funky skew. So even though maybe the at the money, the vol might be a little bit deceptive, does seem like the skew is maybe bracing for a little bit of what you were talking about before, sir. Maybe Putin shaking things up before December expiration. Is that what you're seeing as well?
Yeah, it seems like even though we're at the lower end of the range, that there's more. And when I say concern, and I'm talking about skew, it can also be hope and desire. But I always think of the commodity markets, and the legitimate users are the ones that are trying to lock in prices with calls and puts. And I do believe they're the ones that end up driving a big portion of the changes in the implied volatility based on their more knowledgeable outlook and better insight into their own market than the rest of us have. And that's why I tend to rely on skew so much with some of these markets. The energy markets are definitely like that, and the ag markets are most definitely like that as well. And it's just surprising to see. Yeah, and it's not so much that the calls are have a higher bid than the puts. It's just that it's significantly higher. Like if you look at November, you got 7 versus 11.4. That's a pretty significant difference between the two.
Yeah, so unlike we were talking about with nat gas listeners, where you said people are not getting in ahead of you to pick up some upside, that is the case in wheat. They are starting to looks like pick up on some upside there. So it will cost you a wee bit if you want to do the old Putin trade out there. In terms of action, like I said, it's all December. It was the 680 calls leading the dance. So not quite 100 handles out of the money, about 80 handles out of the money. So fairly out of the money calls. Going up 3,224 times of that, listeners. 3,108 went up on Monday. Excuse me, on Tuesday. I keep saying it all show long. I'm going to do it all show long, listeners. 3,108 going up on Tuesday, 100 on Wednesday, a goose egg today. So pretty much all of that on Tuesday. Looks like there was a fair amount of paper on the 600s as well. Doesn't quite line up 1-to-1. Doesn't look like it was a vertical, but it was opening on both. Could have potentially been a par 680 vertical. Strange vertical, but we have seen stranger things out there. Right behind it, the 600s are right behind it as well. 3,100, 3,200 of those going up this week as well. But they did 2,700 on Tuesday versus 3,100. So it's pretty close. Could have easily been a funky vertical. And let's look here. Any other interesting and or aberrant paper? 5.5 puts going up 2,300 times also in December. So a decent amount of paper here, but not a ton out here this week. Again, more intriguing, I think. More informative is the skew. We're going to keep an eye on that in the wheat markets. I understand that skew. That makes more sense to me than what we were talking about out here not too long ago. But Mr. Rhoads, we got you joining us here on the show. We probably are legally obligated to talk a little bit of equities. So let's head there next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the wonderful world of equities. Pop out of that ags. It is an alpha order list, so we're going to scroll down about 4 slots to equity indexes. Where we go from there is anyone's choice. Before we get there, let's set the table from a vol perspective. We were talking last week about just the absolute volatility annihilation across the board, listeners. I don't care where you're looking, NASDAQ, S&P, they came for all of it. They put a little bit of it back this week. A lot of it today, starting to come off again already. We were at a 15 handle earlier in the session in VIX as we kicked off this show up at about a 1480, up about 1.3 points. VVIX, so the vol of vol was back up at about a 90 as well, so up almost 10 points. So getting a little bit frothier out there as well after languishing at an 80 last week. It seemed last week like they were just done with vol. There was nothing left to be found out there. Vol Q, so the at-the-money vol of the NASDAQ, a little bit north of 18 when we kicked off the show, about 18.15. Puts it up about a point out there as well. That puts that VIX to vol Q spread at about 3 1/3. It's actually about a quarter of a point tighter, but still hanging out in that range. It's been vacillating around for a while, that 3 to 3.5 point range out there between NASDAQ vol and S&P vol. Mr. Rhoads, sir, another funky week. We got a little bit of vol coming back today. What's catching your eye out there in the world of equities, sir? And also, our listeners want to know, are you still heavily short? Are you big short guy short?
I'm not heavily short, but I'm still short. I caught a lot of crap from somebody on Twitter when I said that. What did I say this weekend? I said something along the lines of still short but nervous about it, or something along those lines. And well, if you're nervous, why are you still short? And thank God for the block button.
Someone gave you a hate on Twitter. I find that hard to believe.
I just, you know what? When I was at SIBO, if anybody gave me a hard time on Twitter, SIBO would block them automatically. So there's not a whole lot of trolls left. I've got a ridiculous block list. And I had no control over it. So I'd meet people and they'd say, why'd you block me on Twitter? I'm like, hell, I don't know. What'd you say? I said, what did I say? I said, short stocks, in parentheses for now, but not comfortable as we were a couple of weeks ago. But I'm feeling better about it to now. And real quick, I know this is a little bit of a deviation, but my whole thesis, and I am using S&P future, or the S&P E-minis for this, and some options on the S&P futures. I'm short because VIX hasn't made a new low when we made a bunch of new highs after June. Right? And what I mean is new highs in the S&P 500 and we didn't make a new VIX low. 1291 is like the axe number for me on a close as to whether to keep me in. And we have not dipped below that yet. And then the other factor that's keeping me in, and this is the one that's kind of iffy. You can play around with the start date and say, well, it's not holding up anymore. It's NASDAQ versus the S&P 500. NASDAQ led us up, and I truly believe that NASDAQ will lead us down, or at least indicate that there's no rush to get into any of the equity indices for a while. Today, I'm looking okay with that one. We got the NASDAQ down 0.7%, the S&P down 0.3%. The last couple of weeks, the NASDAQ did outperform, or either held up better or was up more than the S&P 500. But the 3 weeks before that, NASDAQ was underperforming the S&P 500. Honestly, in the back of my mind, I had, if VIX falls before 1291, that's a definite trigger point. But if the NASDAQ outperforms the S&P 500 this week, I probably would throw in the towel on my short. So there's the whole line of thinking right there.
1291.
Always an open book.
1291 is the cutoff point for Mr. Dr. VIX. You kiss that. You hit 1291, you're out.
That's it. Well, it's got to close on it. It's got to close on it.
Oh, okay. Can't just kiss it intraday and then explode back to 15. Interesting stuff. Let's see if we got any interesting paper out here in the E-mini S&P. Spoiler alert, there's a fair amount of it. You would never know, listeners, this was a shortened holiday week by some of the vol numbers we're talking here today. Vol by volume, I mean, of course, because about 2.65 million contracts going up in the E-mini S&P again. We usually expect about 2.8, maybe about 3.2, 3.4. So you're not talking a huge miss out here in terms of volume. This is still a pretty active week. And once again, do I even need to tell you at this point that the front contract going away in a couple of seconds is 19% of the week's volume. Go out a full day, that's another 22.5%. That's about another 4% if you go out 4 days. You go out 5 days, about another 4 or 5%. So you're talking roughly 50% of the paper, once again, is all expiring within 5 days or less, and the lion's share of that is within 24 hours. So that's just where we live now in the equities. Listen, that is the name of the game. You look at the volume numbers, we just talked about them from OCC for August, with second busiest month in the history of the business. 27, I believe. Actually, no, it might have been more. It might have been a 41% increase in index volume year over year. And that's all this 0-day phenomenon. So again, It has just changed the game, I should say, markedly out there. It doesn't stop people from blasting away at crappy puts, though. That's still the name of the game in the E-mini. The biggest trade out here with us hovering right around the 44.50, about 44.57 level. And when we're kicking off the show here, 69,000 of the 37 half puts and 31,000 of the 3,800 puts are just gumming up the works out here. So let's kick those to the curb. Beyond that, listeners, you got about almost 25,000 of the 4,400 puts going away in a few minutes. So, and looks like they traded pretty evenly, a little less than half, about 13,000 of them trading today. 7,600 yesterday opening, 4,200 the day before opening. So let's hope for their sake, 4,400. Doesn't seem like we're getting there today. So let's hope for their sake. They were blasting away on those, and they have now closed them out, and they're looking all right. If that's not doing it for you, a little bit closer to the fire, listen, how about the 44 half puts? Pretty much straight at the money puts right now. Worthy enough, not trading a ton today. They traded a ton on Tuesday, 12,000 on Tuesday, 5,500 yesterday, only 6,000 today. I thought we'd see, as we're just flirting with that level throughout the day, I thought for sure we'd see a lot more paper going up there, but kind of a quiet day for those out there today. Interesting. Either way, opening, only 3,000 of these open right now. So intriguing stuff here. If we go a little bit farther out, we do find some calls. If we go out all the way, almost 8 days, listeners, SEP contract, they did the 4,600s, 13,600 of those going up this week as well. The big day for those, Tuesday, 7,000, and then about 3,000 to 3,500 each yesterday and today. Opening on Tuesday, looks like closing later on, so maybe some folks getting the heck out of Dodge on some 4,600s yesterday after opening on Tuesday. And then let's go even maybe a little bit beyond that. Let's go out full 8 days. The other ones were 7 3/4 days. This is a full 8 days we're going out. So many expirations, listeners. It's ridiculous. And we got the 42 half puts also going up about 10,200 times. The big day for those, 5,500 today, 4,200 yesterday, a couple of hundred on Tuesday. Looks like opening throughout the week here as well. So 42 half puts, you like those in 8 days? You think we can hit that level? I don't know. Intriguing stuff. We weren't quite there before all this madness when we got down to the roughly 4,300 level before Jackson Hole changed the game quite a bit. Actually, if we go a little bit farther out, listeners, we go all the way out 22 days, which is just an eternity in the equities now. Who trades 22 days out? Well, apparently this person does. 4,400 puts going up on the SEP contract that has 22 days to go. 18,734 of those. So actually a fairly active contract. About half of that, 9,300 going up yesterday, 6,000 today, 3,300 on Tuesday, 4,400 in 22 days. We could be there in a couple of days. So that's an interesting one out there. Intriguing. So, Mr. Rhoads, it's not all 0 day. It's just mostly 0 day. There are some people still trading a little bit farther out. Sir. Anything catching your eye in the E-mini this week?
That end of the month option, and that's really what it was when you said going out 22 days. I find that the 4,400 puts being fairly active as an indication that maybe somebody's looking at hedging themselves through the course of September. So I wouldn't have an issue with that trade whatsoever. It just occurred to me, and this is a PSA for everyone, I got to roll my September futures to December. It snuck up on me. It's sneaking up on us.
Sneaking up. Indeed, and you're right. Those were the end of month September is the 40. I don't hate that one either. 4,400 puts. I'll have to go see the level they put those on for, obviously, but intriguing stuff out there nonetheless. As we got a little bit of time left, let's get to a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody, welcome to the Futures Options Feedback. We had a lot of fun this week. It was a shortened holiday week, so we were putting up some fun, kind of silly questions of the week. Which one would you rather buy, Oatly versus Nikola? Both trading around $1.20. I do believe last I checked, Nikola was running away with that one, but I'll have to go pull it up again. We also had some fun fantasy football fun this week. So having a lot of fun out there this week. Last week, we had a more germane to this audience and indeed to Dr. Vic's question. We asked you last week which product has had the largest overall impact on the options market. So a bit of a 10,000-foot question. Gave you three choices, and the infamous other gave you VIX, gave you weeklies, or the dailies /0 DTE. And Mr. Rhoads, I kind of thought VIX was going to take this one, but it actually was the dailies. About 53% of people choosing that. 32% for the VIX and only 15% for the weekly, sir. As the resident once and future Dr. VIX, sir, does that outrage and or surprise you?
It does not surprise me because my 3 jobs ago, when I was running education for SIBO and got to go out and about and amongst the people, inevitably I've heard more sob stories about not understanding VIX or getting crushed by VIX, etc. And I think I even mentioned on the program, on one of the programs recently, it might have been the volatility views, where I was at an event where they were talking about ETFs in New York. And they were talking about just the different strategy-oriented ones, etc. And somebody asked, why isn't there more money in SPIX? It's gone up so much. It's a great performer, blah, blah, blah. And one of the experts on the panel just said, trust. There is a certain segment, and they've always been out there, and I think it's gotten worse periodically depending on what's going on in the complex. But there are a certain segment of traders out there that just don't trust VIX. And some of it might just be because they don't understand it. Part of it might be, the guy that comes up to you at the trade show and goes, I don't trade options. Well, and like, well, why are you coming up to me? I'm at the CBOE booth. You don't want to talk to me. And then they tell me how they got ripped off by the option market. You don't hear those much anymore. It's a much more efficient market. People understand it a lot better. But I do think there's a certain percentage of market participants that just don't have any interest in VIX beyond looking at it and maybe having it give them a signal with respect to what's going on with the S&P 500. So I am not surprised that only about a third of the people say. In fact, I would have guessed that number would have been lower. You didn't make me guess, but I would have guessed for lower on that number. Wow.
Interesting, sir. A little bit of recency bias probably there as well. Everyone's slinging 0 day, so of course that's going to color things a little bit as well. I think if you look back historically, which was kind of the gist of the question, you kind of have to say it's VIX. 0 day hasn't had its day yet, right? Maybe it will become it. It was certainly on trajectory to do just that. Nearly half of all E-mini S&P paper is going away in a couple of days now, so changing the game quite a bit, but it's not there yet. But yeah, our audience is saying, hold my beer, it's there. Speaking of which, our audience looks like there was a surge of interest in Oatly because it's now exactly 50-50, Mr. Rhoads, in our poll. Oatly versus Nikola in our two garbage stocks face-off. Both at about $1.20. I guess now people like Oatly, too. They are evenly split. They cannot decide, sir. So there you go.
That's awesome.
Hard-hitting question of the week. We like to have some fun out there on the holiday weeks. Mr. Rhoads likes to have some fun on his Twitter and his Substack as well. Mr. Rhoads, if folks want to join in on all that fun and hopefully not sing, don't send any hate his way. He's not a hateable guy.
I'm a freaking saint.
I don't know about that, but you're a decent guy, all things considered. We'll ask your family how you qualify for sainthood out there or not. But Mr. Rhoads, sir, folks want to enjoy your Substack and your Twitter. Where should they go? What should they do?
My Twitter is my full name, RUSSELLRHOADS. That's I got in there early, not as early as you. You got the best Twitter handle ever.
We got a pretty good one.
And then my Substack is my full name .substack.com. It is worth mentioning that I'm in an agreement with CME, and I'm going to be doing a lot more writing on options on futures. So that's as shameless as I get. Right there.
Are you threatening
to start seeing a lot more out of me? I think there's going to be a Futures Friday newsletter out of me.
Are Are you threatening to be on the CME hot seat more? Is that what you're threatening, sir?
Anytime you want me, you know that.
I mean,
I got them to change my school schedule so I don't have class at this time, just for you.
Just for the folks. I mean, who else is going to debate wheat skew, right?
That's right.
This is where the fun is, listeners. So there you go. Might be getting a little more, but might not just be the once and future Dr. Vicks. It'll be the once and future and present Dr. Vicks and also wheat options. We'll workshop it a little bit. What do you think? All right, check him out over there on the old Twitters at Russell Rhoads. 2 S's, 2 L's, RHOADS, all one word. Check out his Substack. It's all linked there as well. And, of course, you know where to go to play along with these reports throughout the week. You can check them whenever you want, whenever the mood strikes you, listeners. CMEgroup.com/TWIFO, TWIFO. The place to go to kick the tires and light the fires. That's going to do it for us here on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern, holding court on all things vol views. After that, because we like you pro folks, we're back again to break down some funky trades in the world of options oddities. Then back again next Monday with Option Block all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.